Let's start here with the field position of the markets at the moment. 8 days ago, we got a big, sharp 6% drop in the S&P 500. Did not really prove, at least to date, to be much of an inflection point. But has it been an occasion to reassess where the markets are relative to the economy, and what can we expect from here?
So great to see, Mike. I think what the message is from the Fed really is that the Fed's not going to let you either short the market or be too bearish for too long. And in the end, the positioning is really positive for risk assets going forward. That doesn't mean we can't have some volatility over the summer, and we have a few data points that should present some opportunities for investors to get in if they haven't already. But ultimately, the direction is upward over time. And for the most part, what the market is telling you is that as long as there's no risk of actually shutting down again, even a spike in cases is not going to kill the market right now.
So you say there might be opportunities over the summer to get back in. In other words, are you expecting that that the market just goes sideways, chops around, pulls back more from here? And where might be the greater risk, if that's what you're seeing, in terms of types of stocks?
Right. So, look, the thing is, you've got the fiscal cliff issue, which happens somewhere in July between June 30 and July 31, when the unemployment insurance rolls off. Congress will have to come up with some sort of bill to kind of extend the bridge that the economy is on right now, because the bridge was just a little too short with the original stimulus plan. So the noise around that will probably create some volatility. At some point, the China issue and the tensions with China are going to raise itself. And I think that the issue of spiking cases will, on some days, look bad. And there may be some regional closures, not the entire country. And that will, in fact, affect the market, because the market is pricing in a V-shaped recovery. So anything that threatens that narrative will provide an opening. But I do expect chop. And I think ultimately 12 months from here, you're higher.
Mark, a lot of your names have been the stars of the show. These high-flying tech names, big cap tech seen as a safe haven. I said NASDAQ's back above 10,000. I mean, are there still values left here, and where would you find them?
Okay, yeah, I think of these big tech names, the Amazon, Netflix, Shopify. I don't think they've just been safe havens. I think they've been structural winners, and you've seen acceleration in their growth rates, and I think they're going to print it when it comes to the June quarter, which will kick off in about 3 weeks. The data points get stronger. If you look at online retail sales, my guess is that Netflix is going to be able to add more subs clearly in the June quarter than they did a year ago. So there's some real structural winners. Where we're looking on the other side, and where we're looking for the rebound basket of the names that are still kind of struggling, where the slopes probably aren't V, and they're going to be U-shaped, but there will be slow and steady progress. Those are the travel names. Those are the ride-sharing names. Where I find most interesting is a dislocated, high-quality stock right now is Uber. It's our top pick. I think this thing could go through multiple re-ratings. But yes, so far the recovery has been slow. The ad names, internet ad names, who got hit hard down, I think they're going to start showing a V-shaped recovery. I think the ride-sharing and the travel names are going to be much more U-ish. I think that the demand's just going to take a long time to recover.